Morning, I'm Shivang Mehta. In this session, we are going to analyze UTI Nifty Midcap 150 Quality 50 Index Fund. UTI is one of the trusted company of India, which has asset management company since 1963. So let's go ahead and analyze the new fund launched by UTI. It will be opening on March 28 and fund closes on April 5th. Scheme reopens April 13th. So and people with very high risk appetite can invest in this fund. Before we analyze, please subscribe your shop channel for analysis for new bond, NFO, NCD, IPO, ETF, and many more. Also visit yourshop.com and use coupon code U100 for flat rupees 100 discount on all products for free 1 year GST and ITR e-filing services. So let's go ahead and analyze this fund now. So first, talking about the company UTI Unit Trust of India, it is a government of India owned company. It has major shareholders are LIC, State Bank of India, Government of India, and rest public PSUs. So UTI Asset Management is professionally managed company led by proficient board of directors having expertise in diverse fields and dedicated management team having requisite talent and experience. UTI AMC has been managing assets across businesses. This include domestic mutual fund, PMS, international business, retirement solutions, and alternate investment assets. UTI Mutual Fund has long and distinguished pedigree along with nationwide network spread across the length of breadth of the country. So as you can make out, the company offers diversified range of products and has a nationwide distribution network. So company has quite strong fundamental and qualitative fundamentals. So let's go ahead and see the NFO details. So as we have seen, NFO opens on 28th and closes on 5th. The official name of NFO is UTI Nifty Midcap 150 Quality 50 Index Fund. So during the new fund offered with the scheme of the scheme will be sold at rupees 10 per unit. So this is the price per unit the investor has to pay to invest during NFO of rupees 5,000. So minimum 5,000 you have to invest, and after that in the multiples of 1,000 you can invest more. So exit load and entry load is nil in this fund. Coming to the other details, so UTI Nifty Midcap 150 Quality 50 Index Fund is an open-ended scheme replicating tracking Nifty 150 Quality 50 TRI. So it is an open-ended scheme. That means you can leave and enter this scheme anytime without any expense or exit load. The investment objective of the scheme is to provide returns that before expenses closely correspond to the total returns of the security and represent by the underlying index subject to tracking error. So it is a, as you know, it is a passive fund. So it wishes to reduce the tracking error and give replicate the returns of the its benchmark. Plans and options offered. So there are two regular and direct plans are offered. So depending upon the client's convenience, they can go ahead with the fund. In growth fund, the the cost for the client is less, and in direct fund as well. Coming to the asset allocation and investment strategy, so securities covered by Nifty 150 Quality 50 Index, 100 to 95% will be invested in that, medium to high, and 5% in debt and money market to keep the liquidity going for the fund house. So investment strategies are investment focus and asset allocation strategy. The scheme is a low cost index fund which tracks the Nifty Midcap 150 Quality 50 Index passively. The scheme endeavors to achieve the return equivalent to underlying index while minimizing the tracking error. Portfolio turnover policy. So the scheme is passively managed fund, and therefore the portfolio turnover will be confined only to rebalancing of the portfolio on account of new subscriptions, redemption, and change in composition of underlying index. Benchmark performance of Nifty Midcap 150. So over a period of 5 years, company has given around 15% return. In last 1 year, company has given around 17%. Since beginning of this year, company has given negative returns of around 6%. But as you know, these indexes are for long term investment. So in long term, since inception, company has given around 19.8, so 20% returns company has given. So, this is a outperforming index fund which can, consistently beat inflation. Coming to the top constituents and sectoral representation. So top constituent are, mid cap, top mid cap, indexes. So 50 companies with high profitability, low leverage, and more stable earnings are selected to be part of the index. So the weight of the each stock in the index is based on the combination of stocks quality score and its free float market capitalization. Depending upon this criteria, top 10 stocks are Tata Elxsi, Page Industries, Mindtree, Crompton, ICICI, Emphasis, Bharat Electronics, Voltas, Atul, IPC Laboratories. So as you can make out, there is a diversified range of stocks from different industries such as IT, chemicals, capital goods, healthcare, consumer durable, financial services. IT has been given the most weightage of 17%, followed by capital 14%, capital goods 14%, healthcare 12%. So these are the major sectoral representation in the index. Coming to the strengths, so high risk reward ratio. Generally, mid cap fund invest in smaller and not very well known companies which are in the growth trajectory. So such companies are not generally noticed by research analysts, but once the company grows in their size, revenue, and profit, they are recognized by the analyst market and enjoy higher valuations. So mid cap company has much more potential than large cap and blue cap companies to give higher returns if they are recognized and give strong performances. In the history of mutual fund, of mid cap funds have outperformed large cap funds, and the trend is not likely to change anytime soon. Mid cap funds are lower risky and volatile as compared to the small cap funds with high growth opportunities than large cap funds. They are under followed in stock market as compared to large cap stocks, giving a huge opportunity to wise investors to grow their investment quickly. Liquidity of mid cap funds is more and compared to small cap funds, and mid cap companies has been in business for long enough to avoid blunders usually made by small cap companies. So this adds to the credibility of the mid cap companies. Coming to the risks, so these funds might hit hard during a bear market situation. So you have to consider the macroeconomic situation also while investing in these funds. During an economic crisis, large, well-established companies tend to do better than mid-cap ones, provide more stable and regular return. Mid-cap companies tend to have lower growth potential and then smaller companies and hence provide fewer investment returns comparatively. So you have to consider now your risk appetite as well, that you want to invest in small cap, mid cap, large cap. Considering those criteria, there are risks. Coming to the peer performance of PGIM India Mid Cap Opportunity Fund, Axis Mid Cap Fund, Quant Mid Cap Fund has outperformed highly. They are all actively managed funds and has given around 30% returns. So you have to consider your risk appetite and the performance of existing funds as well before investing in this fund. So should you invest in this fund or not? This is the fundamental question. The investors seeking exposure to the mid cap companies and at the same time wish to invest in reasonably high quality businesses can consider investing in this fund. Furthermore, if you wish to invest in a passive fund that takes a systematic approach, UTI Nifty Midcap 150 Quality 50 Index Fund will be a suitable option. Therefore, investors seeking exposure to mid-cap companies and risk takers can consider investing in this scheme. So, anyone who is looking for long-term wealth creation and has high risk appetite can invest in this fund. Thank you.